So I'm Patricia Liscombe-Hatton, and I'm with Berkshire Hathaway Home Services in Oakland. And today my guest is, please introduce yourself.
My name is Bau-Lin Yueh with Bank of America. My NMLS ID is 399012. And I'm a senior lending officer, and I specialize in the Bank of America down payment assistance and home grant.
Okay, great. And we spoke last week briefly about this program, and I was really excited about it. And so that's why I wanted to have you as my guest today to just go and explain to everyone just how it works, and just any information you could share about that program would be great.
Yeah, so back in 2018, Bank of America allocated $5 billion in this grant and down payment assistance program. It's really to just help not necessarily first-time home buyers. You don't have to be a first-time home buyer, but just anybody that's looking into home ownership, especially here on the peninsula where prices are obviously going higher. It's getting harder to do. So we came up with two programs. The down payment assistance program would give the buyer who's eligible, or if the property is eligible, $10,000, and then the grant called the American Home Grant is $7,500. So when you combine the two, we're talking a total of $17,500 for the buyer. Now, to qualify, it is property specific. So based on the census tract, we've got the areas that are designated, upper, middle, moderate, or low. And so we're focusing specifically on the low to moderate areas. Yeah, so we've got a mapping, got a system where I put in the address to verify. And once they're eligible, the only other criteria would be the income limit. It's the max limit. So you cannot make more. Usually it's between 170,000 to 220,000. So the limit's pretty high. So we've got a lot of buyers that obviously fall below that, and so they're eligible. Yeah.
That's good. And what about credit scores?
So you can go up to or below 620 is the minimum. But what we would like to do is, get a candidate that has at least 680, because then the pricing is a little bit better. So that's the other thing too. Yeah, when we're doing our interest rate pricing, when the property falls within the low to moderate, there is slightly improved pricing as well. And so there's a little metrics where the loan to value ratio, the FICO score, as well as the location all gets calculated into our pricing. And so someone that has, say, a 680 FICO score in this area will see a great amount of good rates. Yeah. Okay.
And I know rates change all the time, but what are we looking like right now as far as interest rates go, and say a 680 credit score?
So someone with a 680 FICO score in an area in the low to moderate right now on a 30-year fix, we're on average seeing 2.625 right now, which is pretty good. And on top of that, a lot of my clients will use some of the $17,500 in terms of allocating a portion of that credit that you would get towards even lowering the rate even further by a discount point that you can get it lower. Yeah. So, but just to kind of cover some of the key features here about the program. Again, as I mentioned, you don't have to be a first-time home buyer, but the property that you are purchasing, it must be an owner-occupied property. So it cannot be an investment property. It cannot be a second home. You can put as little as 5% down, but no more than 20%. So typically, the sweet spot is going to be a max loan amount of $822,000.
822. Okay.
Yep. And then a maximum purchase price of $1,027,500.
Okay.
Yeah.
Sounds like a great program.
And then, oh, one other thing, or two actually other things is that the debt to income ratio, we can go up to 50%, kind of similar to the
Yeah.
Freddie Mac program.
Okay.
And then the other thing is that I'm not sure if you're familiar with the FHA type program,
Yes, I am.
where
But
you can, yeah. The great thing about our program is that unlike the FHA, where you do have what you're considered like a 1.75% funding fee, we do not have that, and that could be significant. Yeah.
sure, it
Mhm.
can. Yes.
Mhm.
Okay, well, great. I mean, I think it's really a good program. I know some people, especially first-time home buyers, at times they may layer a loan, so they, may get additional um, money from other sources. Can that be used with this program?
You can, yeah,
Okay.
absolutely. I don't know if you're referring to just like a second loan, or if you're referring to like just even a gift from a family friend or family
Yes,
member.
sure,
But
both.
both, yeah, definitely you can
Okay.
combine that with this program. Mhm.
Okay, great. Okay, well, thank you for covering all of those top, particulars about the loan program. And I'm sure that we have a lot of people who would take advantage of it. So thank you for sharing.
Absolutely. Thanks for having me. All right, Patricia, have a good day.
You as well.